So how much do you need to invest in the stock market in order to get $1,000 every month in dividends? That's what we're going to talk about in this video. Hey guys, welcome back to the channel. If you're new here, my name is Jed and I post personal finance and dividend investing videos, and currently I am documenting my journey in paying off my student loans. So if you're interested in seeing how everything unfolds or just want to show your support, then please subscribe to the channel, like this video, and then also share this video. Now with that out of the way, let's get back to the main thing. So retail investors or non-professional investors just like you and me are diving into investing in the stock market as a way to make more money. Day trading, options trading, and all the other types of trading out there are making millionaires out of ordinary people. But there are those as well who have lost their money in the process. And because of that, the popularity of dividend investing as a way to generate more income without risking too much time or money has picked up recently. So why $1,000 every month? Is this some sort of magical monthly income target for a lot of dividend investors? Actually, yes. And not only that, I'm picking $1,000 as our number today because it's a lot easier for our calculations. $1,000 is also a good number because a lot of our low amount bills would fit into this. Groceries, dining out, your subscriptions, and maybe even grooming expenses usually don't go over $1,000 unless yours does. So basically the goal is to get to $1,000 every month in dividends in order to cover those expenses. And a lot of YouTubers also use $1,000 as their benchmark dividend goal, so I'll use that as well. So my laptop right here is waiting for us, so let's jump right into it. So here we are on a calculator from marketbeat.com, and I'm going to link that in the description below so that you can use it as well if you want to. But before we go into learning how much money you need to invest in the stock market to get $1,000 a month in dividends, we're going to introduce this to you, this calculator. Just gonna show you what it is, what's in it, and then after that I'm going to explain a little bit about the power of compound interest. And there you go. As you can see right over here, you can choose what type of investment type it is. Is it an individual stock or a portfolio? But for the sake of this video, we're going to choose portfolio because we're looking at a general view of your entire portfolio performance when it comes to dividends. And then you can choose your taxable account right here, the distribution frequency. We're going to change it to monthly because most of the time we're going to be having or owning monthly dividend stocks. The drip right here, we're going to click on yes. And if you don't know what drip is, it's basically a feature that a lot of investors use for their stock brokerages or their brokerage firms, where whenever they make or create dividend income, their dividend income basically gets reinvested back into their portfolio. And this is literally the first step to using or taking advantage of compound interest. But anyway, we have our starting principle right here. You can choose whatever amount you want. Annual contribution right here, this is the amount that you contribute every month. You just multiply it by 12 in order to get the annual contribution amount. And then the dividend tax rate, depending on where you are, this is where you put it in. Tax exempt dividend income allowed per year. And then the annual dividend yield percent, you put it right over here. Expected annual dividend increase per year. And then expected annual share price percent per year. And then the timeline, which is your years invested. We're just going to keep this one in 20. Now let's make a scenario right over here. Right now, my account value is around 7,000. And then let's just, for simplicity's sake, we're going to put 0. We're not contributing anything to this portfolio. And then we're just gonna start with the principal balance of $7,000. And let's use a 3.5% dividend yield as a modest one. Expected annual dividend increase percent of around 3%. And then after that, share price appreciation percent per year of around 5%. We'll keep everything as is, and then let's calculate. All right, so now it's calculated. Let's go over here, scroll down. As you can see, in the very first year, you're going to get $248.97 in annual dividends. At the end of the year, you have your 3.5% dividend yield, and that is amazing already. You're not doing anything, you're making already money. Now for the second year, you got your $277 in dividends. Like I said, you're not doing anything as much, but your yield is already increasing. And then after that, by the third year, you're going to hit that $300 mark. Okay, so that's pretty amazing. So question is, are we actually going to reach our goal of $1,000 every month in dividends with this type of setup? Let's go over to 20 years. Actually, no, you're not gonna get anything. You're not gonna get even closer to that amount at all. So, for the sake of this, let's put $1,200. This is almost close to what I do right now. I contribute at least $100 every month to my account, and I have around $7,000. So let's keep the annual dividend yield of around 3.5%. Everything else is the same. So let's calculate. And on the first year, we're going to be making $250 as well. But here's the thing, look at the second year. On the second year, you're going to increase your principal balance because you've contributed $1,200 at the end of the year. And then after that, your annual dividend is $321 already. This means that you gained at least $50, $40 to $50 more compared to what we did in the last example. And that is the amazing part of compound interest. You know, the more that you keep adding into your portfolio, the more that you invest every month, the bigger your results are going to get at the end of the year. So always take advantage of compound interest. If you can start right now, then do it. Because with compound interest, time is your friend here. And you want to take advantage of that because you will never get back time anymore. So anyway, that is the power of compound interest. Question is, how much do we actually really need in order to get to $1,000 every month in dividends? So let's go back over here. Let's just say our starting principal is around $100,000. You know, just for the sake of it, $100,000. Let's keep the annual contribution of around $100 every month. And then on the next example, we're going to bump that up to $1,000 a month. So there you go. So let's calculate that one. So let's scroll over here. And on the first year, you're going to be making $3,500 already on just $100,000. Now on the second year, you're going to be hitting $4,000 every year. Now, are we going to get to this $1,000 a month that we're looking for? Let's scroll over. And there you go. In between year 11 and year 12, you're going to hit that mark already. By year 11, you're already $11,702.86 in dividends, and by then your yield is already at around 4.7%. So basically within the middle of the year, you're going to get to that $1,000 a month goal because you're going to be hitting $12,000 in yearly dividends. So with that in mind, the amount that you're going to need is probably around $250,000 in this kind of setup. So what if you don't have, 11 or 12 years to wait and you want to speed it up a little bit? So let's go ahead and kind of like add $1,000 every month to this portfolio. We're going to keep the same dividend yield, calculate the dividends, and let's go over here. And on the first year, you're still going to be making around $3,500. For the second year, you're going to be making at least more than what we did in the last example. And then by the 8th year, you're going to be making $12,000 in yearly dividends, which basically equates to around $1,000 every month in dividends. And you have invested at least $283,000 in your account. So there you go. That is the number that you are looking for in this type of setup. If you started with 3.5% as your dividend yield and it's constant throughout the first year, and it keeps on a constant basis, then there you go. You're gonna reach that $12,000 or that $1,000 a month goal with $283,000 invested. Now here's a what if again. What if you wanted to earn $12,000 already in the first year? So let's go do that one. Let's see how much do we actually really need. Let's go for $250,000 because apparently that's what, that's the number that we kind of like chose earlier. $250,000 in order to get there. Let's keep the annual contribution of around $1,000 every month. Dividend yield of around 3.5%. Let's calculate. And on the first year, you're actually not gonna get it, apparently. You're not gonna get the same amount that we did back on the last example, even though we had around invested of around $250 already. So what's happening here? And you gotta keep in mind that every time that you make your dividends or every time that your dividends are increasing, those dividend payouts are a result of different factors. The first factor to that one obviously is the stocks that you own, and because your stocks have different yields, okay? They offer different payouts, and because of that, I mentioned yield. 3.5% is not going to be the same for all stocks. Some of your stock may be even around the 5%, 6%, or maybe even 7%. And this number that we use right here is just pretty much an arbitrary amount that we chose. 3.5% is pretty much a modest amount. A lot of people have around less than that, to be honest. But since we added data that each of our dividends are increasing every year and the share price of our stocks is also increasing, that's why this amount is very different. In this specific example, we're going to get to 12,000, let's just say around the first quarter of year 3, you're going to get there, $12,000 a year or $1,000 a month in dividends, but you're going to have to invest at least $316,000 in order to get there. So finally, let's go over and use something that will actually help us get to $12,000 a year or $1,000 a month in dividends in just year 1. So instead of just looking at the principal balance, let's also look at the dividend yield. So for the dividend yield, we're going to put 5% right there. This is what a lot of people actually like, maybe even 6% or 7%, because those are the high ranges already for dividend investing. So let's calculate that. And let's scroll over here, and then boom, there you go. On the very first year with 5% dividend yield, you're going to get $12,000 already in dividends. So this is the magic amount that you're looking for, $250,000 but the yield should be around 5%. Now keep in mind, like I said earlier, your stocks have different yields on it. In this specific example, or in this calculator, it's not actually accounting like the different changes to the dividend yield every time the stock price changes, because your dividend yields for the stocks that you own will change every day whenever the market is open. If the share price of the stock that you own actually falls, then your dividend yield will actually increase. And this is why we're getting so many different numbers in regards to the principal balance and annual dividend income, because like I said, there are so many factors affecting your dividend income at the end of the year. So what is the lesson here? Basically, if you want to have dividend income that is really high, or at least get to that level, you'll need to have at least a dividend yield of around 5% and invest a lot of money at the very beginning. But I know that a lot of us do not have this type of money, lying around in our bank accounts. All of us are actually, not millionaires. We're just thousandaires, So I do understand that, but since a lot of us actually want to get to this level, so the main thing here is to keep investing in your account so that you get to that level eventually. Sure, you're not gonna get to $1,000 every month in dividends in year one, but at least now you know that this is the power of compound interest, and this is how you're going to get to that level. You just have to keep on investing in your account, make sure that your yield is, increasing and not decreasing, and you gotta make sure that you're choosing the right stocks in order to increase your portfolio's performance every year. And if you do all those things, then your dividend income is going to increase every year as well. So there you go, guys. The magic number that we are looking for is around $180,000 to upwards of $300,000 in order to get $1,000 a month in dividends. And that also depends on what type of yield or how big your yield is. It could be 3.5%, it could be 5% to even 7%. The lower your dividend yield is, and then there's no dividend increases every year, then it's gonna take you longer to get to $1,000 a month in dividends. But if your dividend yield is higher, and then there's also dividend increases happening every year, then the shorter and the faster you're going to get there. And there you go, guys. That is how much you need to invest in the stock market in order to get at least $1,000 a month in dividends. Now, I hope you found this video very helpful, and I hope you found it very informational. And if you do, please do me a favor, like this video, share this video, and also subscribe to this channel so that we can help this channel grow. And if you want to start your dividend investing journey as well, Webull right now is offering a promotion of 2 free stocks if you sign up and then fund your account with $100 or more. Click in the link below so you can get 2 free stocks worth $10 to upwards of $200. And also don't forget, I am on Instagram at DailyDread. If you want to just chat there and collaborate, exchange some ideas, I am there. Please add me. Thank you so much for watching. I hope you have a wonderful day, and I will see you in the next video. Bye.